Welcome to the second part of our presentation concerning NASDAQ private market and why, as investment banking operations, working in Europe, Asia, and obviously in the United States for many decades, and running Maxwell Rand as an operation around the globe, I can tell you that our investment portfolios will be housed in the secondary market because equity market and private equity is getting bigger than the larger market. So technically speaking, when you look at two exchanges, it's like having two casinos available to you. One casino is regulated, but it's a very high class. You have to meet the KYC and AML requirement of NASDAQ. You have to have a minimum of 5 million net worth in order to be able to qualify to that participation. So I call it a private closed network and designed for the LPs, for the VCs, for the institutional investors, fund managers. But at the same time, what we call the Wall Street. Then there is a Main Street. On the Main Street, we created the pipe through Maxwell Rand. So therefore, when we are creating small blocks of opportunity for the investors that they cannot qualify for that 5 million, we create that pool of investment as pipe, private investment in public entities that qualifies that company so we can invest. And through that investment, we definitely work out the transaction of the stock transfer under compliance, under the settlement, under the regulation. So with that in mind, I want to go to the next section of the how NASDAQ is moving beyond the United States to around the globe. So take a listen.
So I would have expected, given the enormous opportunity set on your doorstep, you'd just be in the US. But you told me in our earlier conversation that you've already brought on board quite a few UK bodies and some others. So tell me about your geographical thinking.
Yeah, I mean, listen, the private markets, because they are by and large an unregulated space, have the potential to be, I think, maybe second only to FX as one of the true global asset classes. With public market securities, you've got country-specific regulation that prevents stocks from trading from one exchange or one country to another. You can't take a company listed on the DAX and just naturally list it on some other exchange. There's securities laws that prevent that. Well, that doesn't exist in the private markets. And unicorns, I think the number is something like a third of unicorns are outside the US. I mean, majority of unicorns are in the US, but it's becoming a global market, and that's changing. And you're seeing huge innovation coming from places like Israel, where I was last week, and India and China. The largest private company in the world right now is ByteDance. That's the owner of TikTok. So it truly is a global market. We have a lot of clients and company clients that are in the UK, that are in Canada, various places around Europe. So I do think that, and even Latin America is starting to evolve. Places like Brazil and Mexico, you're starting to see some decent activity. So it is another one of our ambitions, again, without the sort of barrier of the public market securities regulation, that to the degree our technology can connect these pools of global private market capital, you can really create this true global asset class. So we're super excited about that.
And when you meet resistance or objections or uncertainty, in what form are they found?
Yeah, that's a great question, because I think there has been a mind shift on the whole topic of liquidity in private markets. And let me talk about what that might look like. I think the old school Sandhill Road venture capital view of secondary market liquidity is it's a bad thing. Hey, I'm investing in a private company and you cash out when I cash out. And if that's 14 years, then so be it. But you shouldn't be getting liquidity and taking chips off the table before I do. I think that's the old school way of thinking. And so I think the old school VCs were very much against private market liquidity. I think there's been a real evolution on that. Again, it's not reasonable to expect employees to wait 14 years to get liquidity. So I think that that's changing, but there still is some resistance there. I think from private companies, a lot, no, I wouldn't say a lot, but there still are private companies that are very hostile to the idea of offering liquidity to their employees. Because again, hey, we give our employees shares in companies as a retention tool. We don't want them selling them because we want them to be sort of tethered to the company. Again, I think that mindset is shifting. Like, you just, if you're going to attract and retain employees, you need to offer these kind of liquidity programs. So I think there's sort of an old school perspective on all of this, and there's sort of a new way of thinking about it. I think this whole idea of the reality that you need to create liquidity in private market securities is something that's becoming much, much more mainstream. I think for investors, listen, there is a natural risk and illiquidity that goes along in investing in private company shares. You don't have the disclosures that you have in public shares. Obviously, public companies need to do quarterly earnings reports and regulatory filings. And for any public company, you know an awful lot about that business. And that's how the regulators designed it. Well, we don't have those rules in the private companies. So you have less liquidity, you have less information, and you have more risk. So there are inherent risks to investing in private company shares, which is why the regulations are such that you need to be sort of what we call an accredited investor. These are not investments for mom and pop, small, unsophisticated investors. Regulators want you to have a degree of sophistication to buy these shares. But what does it mean for a company to be 14 years before they IPO? Well, when companies are IPOing now, because they're waiting so long, Simon, they're largely fully valued. These are large, mature companies by the time they IPO. And every investor wants to invest in a company at that hyper growth phase. You want to buy a company when they're growing 30, 40, 50% a year. And because companies wait so long to go public now, if you want to invest and sort of realize those hyper growth returns, you're forced into the private markets. And so that's why we're so focused on removing this inefficiency, removing this friction to make it easier for people to buy and invest in companies when you want to be investing, which is when they're in that hyper growth phase. Because if you wait till they IPO, it's probably too late.
So when you think about 10 years hence, is yours really just going to be understood as an open access tech platform?
I hope that by and large it is. Again, there's always going to be guardrails around this. This is always going to be a market for the most sophisticated investors. But yeah, we want to make it a place where the largest, most sophisticated investors can come and transact and execute with trust and confidence, and that doesn't exist right now. One of my big VC clients told me something super interesting last week. He said, investors in venture capital tend to get fired not for making bad investments. It's when they make a good investment, but they don't take chips off the table. You invest in a company and it goes up 30x. A logical person, if you were in the public markets and you bought a stock and it went up 30x, you'd probably sell some and take chips off the table. Well, again, because in the private markets, that's so difficult to do, it doesn't happen. And so you buy a company, it goes up 30x, and then it goes down significantly from there. He said, that's why private market investors get fired, not for making bad investments. And I thought that was a really interesting perspective. So we're trying to create a platform where investors can actually risk manage. That's what investors gets paid to do. So when, certain companies go up 30x, they can take profits. And maybe some other companies like we're seeing right now that are getting revalued down maybe too aggressively, you want to be able to buy into those companies and actually actively manage your portfolios. And that's something that really, really can't be done. And let me just finish by saying, who are the largest investors in private companies? Who are VC's largest investors? It's pensions and endowments. And who are pensions and endowments? Well, it's cops and it's firemen and it's nurses and it's teachers. So these are ultimately the investors in private markets, and they need those levels of protection just like they have in the public securities markets.
So you've explained it very clearly, but I found myself ahead of this interview scratching my head and just saying, wasn't blockchain supposed to do all this?
Yeah, I think that's a great question, and that's a part of our platform. And, listen, I think, a lot of people don't actually understand at its core what blockchain is. It's just a more efficient database than the ones we've used before. They create a permanent record of everything that changes, and it just makes data more auditable and more accessible and more transparent. And that's about the simplest way that I think of what blockchain does and what does on our platform. And if you think about a private company, again, every time a private company hires someone or fires someone or issues new shares, what we call the cap table, that statement of record of what their shares are, it changes. Every time they do a new funding round and they get new investors, it changes. So that's essentially a massive data problem, because that cap table needs to be right. A company needs to know who their shareholders are, who owns what. If they're going to do a funding round, if someone's going to be buying into a company, they better be darn sure exactly, how many shares are outstanding and who currently owns what. And that problem in this market is a really hard one. And it's like almost the perfect use case, Simon, for blockchain, because that's what it does really well. It tracks and creates audit trails around really fast, dynamically changing data sets. And so, our belief is it's going to be a huge, huge part of creating future efficiency in the private markets. Now, there's a sort of a next generation of that if you ask me, like, looking into your crystal ball on what do these markets look like in a decade or 15 years, there could be a world, and there are some companies out there that are trying to do this, that are trying to do tokenized shares of private companies, where a company would essentially issue their private shares to employees in a tokenized form, and those tokens could trade very easily and almost like a public company stock. And I think the market may get there eventually. I think it's a little early now. It would be a really fundamental change for how private companies raise money, and I just think it'll take a while to get there. But I think, again, on a 10 to 15 year view, that's probably where these markets are headed.
When you want to escape the pressures of, NASDAQ private markets, where would be your favorite destination if you can just go and have a week where your phone won't work?
Well, I'll answer the question, my favorite destination, but also how to get there. So I'm a private pilot and have been for 20 years. It's a huge, huge passion of mine. So my happy place is typically 20,000 feet in the air. So anywhere I can fly myself is typically somewhere that I love. I do a lot of flying for fun. I do a lot of charity flying. One of my big hobbies that I talk about too much is I do a lot of dog rescue and animal rescue, and fly for a bunch of charities here in the New York area. And that's where we're bringing rescue dogs from down south, where there's too many, up to the Northeast, where there's a lot of adopters, sort of a supply-demand problem that we're trying to close. So do a lot of dog flights. I do a lot of fun flights. My favorite place to fly is to the Bahamas. Just a stunningly gorgeous place to fly around in a small plane. There's 700 islands in the Bahamas. A lot of people don't know that. And a lot of them have small, quiet little private strips. So you can go to these remote, out-of-the-way places that make you feel like you're in the South Pacific. But for me, getting there is half the fun.
So anyway, I wanted you all to get a glimpse of NASDAQ private market, getting to know the man behind the story, understanding that we are always managing risk, whether we were in Switzerland or we had our investment banking operation or we are doing IPOs or we are creating exit strategy for our stakeholders. Especially in these days when we are talking about environmental sustainability and social and about governance and growth. This kind of environment now has given us the opportunity to serve our clients. So I am suggesting this to all of your entrepreneurs, that if you're planning to grow your business, the best thing to do is position your company that it can become NASDAQ private market qualified. And obviously that's an honor and a privilege, because that gives a lot of stability, a lot of compliance, a lot of regulations. And if you do need that kind of help, you can reach out to us at INVESTROOM.AI or myself at amoradi@maxwellrand.com, and I'll be more than happy to assist you. But more importantly, we just wanted you to get a glimpse of why we are talking about this. And in the next section, we're just going to talk about a little highlights of what we think the reason that we chose and we are suggesting to you that you should become a candidate of that transaction is as follows. So with that,
excellent. Now, one of the things that listeners,
let me now stop the recording and we proceed to the next part.